What is up guys, my name is Ignas, welcome back to the channel. Last week we made a dividend comparison on several materials names, and there was one stock that had better fundamentals than the other two. That is Sherwin-Williams, ticker symbol SHW. On the year to date the stock is now down for 28.85%, but zooming out to 5 years there has been quite some growth, plus 76.54%. It is currently the largest name from the specialty chemicals industry, with a market cap of $62.53 billion. The stock is trading at a higher P ratio of 32.64, and we now have a dividend yield of 0.99%. So today we'll be taking a deeper look into Sherwin-Williams. We'll check financials and fundamental ratios, where the analysts think the stock will be trading next year, what superinvestors and insiders are doing with it, and lastly we'll get into the technicals of the price chart. Let's see if the name should be added into our dividend portfolio, or if we would move on to something else entirely. An early thumbs up would be very much appreciated, and with that out of the way, let's start. So first let us take revenue, and this is here Sherwin-Williams' history of the last 5 years. Back in 2017 they were bringing $13.8 billion on the trailing 12 months. Then in 2018 it went up to 17.5 billion, 2019 another increase to 17.9, and in 2020 again a small increase to $17.99 billion. But afterwards revenue has been accelerating upwards. In 2021 we saw it at $19.67 billion, and now with the most recent quarter in 2022, revenue for the trailing 12 months came in at $21.68 billion. So in the last 5 years there have only been one quarter where we saw a decrease year over year, minus 5.62%, but other than that every quarter in the last 5 years has been in the green, and that especially accelerated upwards after 2020. Now the next part I want to take a look into is the price to earnings ratio, and here is the company's history for the last 5 years. Back in 2017 the P/E ratio was at 30.09. Then in a year in 2018 with earnings per share going up, price to earnings went a bit lower to 22.45. In 2019 we saw the stock price going higher, so P/E ratio at 35.91. 2020 a similar ratio at 33.72. And 2021 with the price surging to the highs of $350 per share, we saw the P/E ratio climbing to almost 50 at 49.98. Though that changed this year with the price moving back lower, where the P/E ratio is currently at 32.69. So the best time to get into the stock was back in 2018, with the P/E ratio closer to 20, but currently with it at around 30, it is still in line of what we have seen over the last 5 years. Now let us take shares outstanding. So in 2017 we had it at 286 million shares. Then a year in 2018 that was decreased by 0.35% to 285 million. In 2019 another decrease by 1.4% at 281 million shares. 2020 276 million. And in 2021 we saw the largest decrease by 3.26% to 267 million shares. And this year that number still went lower, where we now have the number of shares out at 261 million. So in the last 5 years, Sherwin-Williams managed to decrease the number of shares out by 25 million, which at the current price of around $240 per share would be a stock buyback of $6 billion US. So with a market cap of $60 billion, that is a buyback of almost 10% of the company. Now the next part we are taking a look into our dividends. So in 2018 the dividend payout was at $1.09, then in 2019 that was increased to $1.20, 2020 we had it higher at $1.24, in 2021 a huge increase to $1.96, this year we already went over $2, and with the most recent quarter in the dividend payout is at $2.29. So the dividend payout has been moving up consistently, with it more than doubling over the span of 5 years. But where does it stand with regards to the dividend yield? To check on that we'll use my dividend investing watchlist on Google Sheets. So we are in the watchlist, and here is the tab for Sherwin-Williams. Here is its dividend yield history for each quarter of the last 5 years, and on average the stock was trading at a dividend yield of 0.8%. So the worst time to get into the stock was back in 2019, with a dividend yield of 0.57%, which is below that 5-year average for 28.92%, and the best one was just recently in 2022 at 1.01%, over average for 25.95%. Though if we would be getting into the stock right now at a dividend yield of 0.99%, that is still quite close to the highs, currently over average for 23.46%. So it seems to be an interesting opportunity to get into the stock right now, at least for the dividend yield. Now, if you would be interested in doing a similar analysis on another dividend-paying name yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we checked history, but how about expectations? Where the analysts think the stock will be trading at next year? So we have information from 26 price targets from analysts. Targets range from the lows of $210 to the highs of $300 per share. On average, they come in at $261.47, and currently the stock is trading at $241.30. So this suggests that on average, analysts expect that next year Sherwin-Williams should be going up by around 8.4%. Now let's take another angle. Here we have earnings per share estimates from 29 analysts, and on average they predict that the company will be bringing $10.25 in earnings per share next year. If we assume that the P/E ratio remains the same, then for next year we are looking to an increase in the share price by around 17.5%. So analysts seem to be quite bullish for next year, expecting for the stock to go up from 8 to 17%. Now let us take Superinvestors. Currently 4 funds are holding Sherwin-Williams. 2 of them have added into their positions. The largest addition was from Maverick Capital, plus 13.43%, and they are now holding 24.6 thousand shares, which takes 0.11% of their portfolio. But the largest holder is Mears and Power Growth Fund, with almost 404,000 shares, taking up 1.97% of their portfolio. So it seems that Superinvestors are quite bullish, with 50% of them adding into their existing positions. Now if we also check insider activity, in 1 year there has been 2 long transactions, totaling to $773,000, and then there was 1 sell for $401,000. So overall we could conclude that insiders made more long transactions than short, and they paid almost 2 times more than what they received. So this also puts insiders into the bracket for bulls. Now for the last part, we'll take a look into the chart. The stock bottomed back in October at $195 per share. We saw the relative strength index at around 40, and the 12-day moving average of the MACD was going together with the 26th one. On the 25th, the stock jumped to $220 per share, closer to the 50-day moving average, and both the relative strength index and the MACD started going higher. In 2 weeks, we had another jump up, with a highs of $245 per share, which there was at the 200-day moving average, but then the price closed a bit lower at 240. Relative strength index was close to overbought at 66, and the 12-day moving average of the MACD was a bit higher than the 26th one. Now the price went sideways for a few weeks, then detached from the 200-day moving average, and on December 13th reached the highs of $265 per share, getting close to the 300-day moving average. Though the relative strength index was still way up there, we already had the bearish crossover in the lines of the MACD. Now the stock started stumbling afterwards, but on the 19th we still had that moving average crossover, where the 50 went over 100, and we are now still trading at around $240 per share. So I do believe we have quite an interesting place here. Relative strength index is now under 50 with 48. The 12-day moving average of the MACD is under the 26th one, but the distance has been closing up for the last 3 days, and then we just add the 50 and the 100-day moving average crossover. So this could be an interesting place to start a position, looking for a resistance of the 300-day moving average. So we have checked for all the parts I wanted to take a look into, and now let's do a quick recap of what we found. In the last 5 years, Sherwin-Williams' revenue has been moving up consistently, and especially accelerated upwards after 2020. With the current price to earnings of over 30, it is not the cheapest, but it is in line to where it has been in the last 5 years. Now in 5 years, the company managed to decrease their number of shares out by 25 million, which at the current price is around 10% of its market cap. Their dividend payout has been moving up consistently, and this year with the stock going lower, the dividend yield is now 23.46% over its 5-year average. Superinvestors are quite bullish for next year, expecting for the stock to go up from 8 to 17%. Superinvestors are quite bullish, as in the last 6 months they have been buying and holding, and in the last year insiders have been buying more than selling. Technicals are also interesting. The relative strength index is under 50, and the MACD has just been turning to go higher. So now I am looking at a resistance of around $260 per share, which from the current price of $240 would be a potential for a plus 8%. So at first glance I was not at all into Sherwin-Williams. The PE is high and the dividend yield is low, but after taking a deeper look, I think it could be an interesting addition for our materials exposure, so I will likely be starting a position in it by either adding new funds in next month or maybe decreasing some exposure elsewhere. But that is now definitely something I would like to add into my portfolio. So what do you think? Are you holding Sherwin-Williams right now? Share your stance on the stock in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. A few weeks back I've looked into other names, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.